Good morning, traders. It is Friday, April the 12th. Taking a look at the charts, it looks like we're going to have some pretty good price action this morning or today in general. I think we're seeing some probably going to see some panic selling in a few different commodities, crude oil, silver, gold, miners. They're all getting hit in pre-market pretty well. And when the market opens at 9:30 regular trading hours, we're going to be likely below some key pivot zones, which are is going to trigger some stops to be run. We're probably going to see quite a big bout of selling across the precious metals sector. Anyways, let's just start off with the US dollar as normal. Here's the US dollar index. We're finding a little bit of a bounce this morning. It was kind of looking pretty bearish for metals the last couple of days. The fact that we saw metals really start to slide, or sorry, the dollar really start to give way and start to break down below our little minor support trend line here. As it started to show weakness that it was breaking it, we even saw precious metals become weaker, which technically, going back for years or so, whenever the dollar goes down, we're usually seeing gold and silver go up. Well, the fact that the gold was breaking down, or sorry, the dollar was breaking down, and along with metals seeing weakness with it, that's not a good sign. This morning, we're starting to see a bounce in the US dollar index, and that's actually putting some pressure, some serious pressure on precious metals this morning. And really, we've got to break this upper channel. If it breaks this upper channel, we could see the US dollar off to the races. And just kind of looking at the grand scheme of things, the US dollar has gone up. It's formed a nice trend line, support trend line across here. It started to run the stops, kind of broke things down. And this is what the market likes to do. It'll create a dip that spooks people out, and then you can see it turn around and rally and take off. And we'll see if that is what unfolds, but overall we're seeing a little bit of strength in the dollar. It is coming up into resistance. We're at this trend line. We do have this previous high at 82.60 up here also, so it does have some work to do, but there is a very good potential here that it finds support now that it's run a couple of these pivot lows. That kind of cleanses the air for the dollar, and we could see it end up taking off, and that could do some serious damage to precious metals, and it could even do some damage to overall the stock market. But generally, we're seeing money move in with the dollar and stocks more often than not. So it's kind of a crapshoot for what the broad market will do with a rising dollar. It depends on the fear overseas going on and where that international money wants to flow. Taking a look at commodities, let's jump into energies real quick here. Here's crude oil chart. We can see we had this move down, formed this bear flag, really broke down yesterday and started to pull back yesterday and is breaking down this morning. It's breaking a key support zone here, this previous pivot low. Now when regular trading hours open, you can see we've got some volume here in pre-market trading, not a whole lot, but when regular markets open at 9:30 and everybody's on board, I think we're going to see the fact that we've broken this pivot low here. There's going to be a lot of stops run in various ETFs, and the commodities itself will probably see this thing drop fairly sharply and continue down probably to the 91 area or maybe even beyond. Looking at natural gas always seems to do the opposite of what the equities are doing. We're seeing equities pull back this morning in commodities, but we're actually seeing natural gas kind of buck the trend, go the opposite direction. It's pushing to new highs. Again, zooming back, it's kind of starting to get, in my opinion, this kind of move up. I'm not a fan of it. Overall, I still feel as though it's building a top and kind of just pushing into these new kind of highs, which eventually we're going to get a sharp pullback. Not a fan of natural gas, haven't been for a while. Looking at precious metals, they're kind of the big mover for the day. You can see here's gold. It's a 4-hour chart, and zooming into just yesterday. Yesterday we saw price pull back a little bit, kind of just fluttered around, formed a little bit of a bear flag, and this is what I pointed out in yesterday's pre-market trading, that we had this move down, and yesterday morning we were starting a bear flag, and a bear flag is usually the halfway mark, and I pointed that the next move would likely come right down to this green support trend line. Simple measured move, that's right where we're trading at right now. It's just tagged it, starting to get a little bit of a bounce. Overall, keep in mind this is still pre-market trading. We usually do see the low for precious metals, the low or the high depending on the trend, right around this time, around 8:20, 8:30, 8:40 in the morning. It's usually when you see a big move of volume that kind of spikes things. So this could be the low for the day, but overall we are breaking below this pivot low right here, and we could end up seeing it really give way when regular markets open and everybody is on board. We could see a huge move down simply because there's a lot of gold ETFs that hold physical gold, and of course there's record flows moving out of them. There's people are becoming very fearful of gold, and breaking this low could be the straw that breaks the camel's back. A lot of people get out of those ETFs, which are going to have to liquidate positions and sell contracts, and of course it's going to really add to this fuel to the downside, which is what we want. We want a huge breakdown. We want to really see a big spike in selling in miners and gold and silver to really cleanse the air and give us a real extreme pivot entry point to try and get our toe in for a massive run down the road. Looking at silver real quick. Here's the silver chart. It's pulling back significantly from yesterday. It has yet to break this recent pivot low. If it does break this low, we're going to see a pretty significant selling in silver. It's much more volatile on a percentage basis. If it can break this level during regular trading hours, I think we're going to see some pretty strong volume kick in, and we're going to see another big downdraft, probably right down to the 26.30, maybe even 26 area, which is kind of the long-term support zone, and enough to really flush the market out possibly. Looking at miners, gold miners, silver miners, this morning obviously they're all still in the downtrend. This is showing some pre-market trading activity, so we're going to be gapping down fairly significantly on those this morning. We've got this previous pivot low, which we have broken in pre-market trading. That being said, you won't get the big flow of automated stops kicking in until 9:30. Right then we'll see a big order of selling. We'll probably see an initial drop for the first 15-20 minutes of the morning, or it could sell off to around 11:30, who knows. But overall, we're going to see stops being run if prices continue to trade at these lower levels going into the opening bell, and that's going to create some pretty good panic selling in miners. Now, GDX is hitting new lows. If we look at GDXJ, the juniors, we're not quite down at this low down here. It still has some more room to fall. If we look at the SIL, the silver miners, they're still holding up a little bit more, and that's simply because silver's still holding up more than normal. But overall, it's still a bearish pattern. We still have a series of more or less sell-off, bear flag, sell-off, extended bear flag, sell-off. Still working in bear flag mode. At any time, it could continue another leg down. So that's kind of where we stand this morning. For those, we're seeing precious metals are down quite a bit. Gold's down 2%, silver's down 3.5%. So gold miners are probably going to be down possibly 2 to 5% again today. We'll see if there's a recovery late in the day or anything, or how things open, but it's going to be a bloodbath for gold and silver and miners. Taking a look at bonds, money is obviously flowing out of other places and it's moving into bonds. We can see bonds floating back up this morning, finding some investors. Overall, it's kind of moving up to short-term resistance. I'm not a big fan of this chart really until we see the SP 500 start to actually show some technical breakdowns. This is kind of an early warning sign that we have broken this level, and price more or less price has started to kind of put in a rounding bottom. It's broken out to the upside right here, and it's starting to consolidate, and it could easily chop around and form a big handle here, a cup and handle pattern, which in the end points to much higher prices. But I think we really do need to see the equities market put a top in and roll over, and I think that's possible at any time. We're coming into May, we're halfway through April already almost. So there's something building here, I think, and I think the equities market is in line for a pretty sharp correction. But really, we're sticking with this trend until we get price and volume action clearly defining a downtrend. But we may be adjusting our stops on our SP 500 trades today. We'll see how things kind of unfold. Looking at the SP 500, so we can just see the overall trend. This is the daily chart. We had a nice push up there yesterday. It kind of closed back at the halfway mark of the session, giving back half of the gains. This morning we've drifted back down in early market trading, back down into yesterday's opening price, the previous day's closing price, which is a natural support zone. We'll see if it can find steam or if it's going to have a reversal candle and start to pull back. Now keep in mind we have had 1, 2, 3, 4, 5 days up. That's pretty significant. That's about half of a cycle. Usually we got a various cycles here, but we got about a 12-day cycle. So we're kind of up for a more or less almost 6 days. We might have another day or two of chop here where it could gap higher or lower, but we could eventually start to see it come back down and take a breather, or actually reverse as we are coming into sell in May and go away. So anyways, either way, we're still long. We're holding our positions. We've got our stops, which we'll be adjusting to break even on our previous entry point. We did get back over here. We're sitting pretty with a nice position. We did get back. We also got in over here, which we're up about 10% on that position. So we're going to be moving our stop up to entry over here. So no matter what, this first position we lock in gains, and we'll get break even if we do see a sharp correction and reversal to the downside on the second entry. We did sell some of our position that we got in. Actually, we got in over here. Sorry, we did sell some of it over here for a small gain to reduce risk, as we were starting to get a reversal candle here, which it happened to recover at the end of the day. And of course, we've had a nice move up. So either way, we're going to have some pretty a couple profitable trades there, and we're just going to stick with this trend. It can continue to play like this and be very scary for extended period of time. Market always looks overbought, always looks toppy in a bull market, and that's the wall of worry that everybody kind of keeps trying to short, and you get this unwinding every time you break to new highs, and unwinding of short positions, and you get some fear again, unwinding, and that's kind of, it's just a repeated cycle. But we are starting to get long in the teeth in the grand scheme of things. It's been pretty extended move to the upside. Just looking at these trend lines, you can see we're working our way up here. If you were to just draw some lines up here, we're kind of, depending on how you want to draw it, we're running across the top of this channel or getting close there. So I think a pullback will be pretty significant. And when we do, I think we eventually will come down and break this low. So there's a big potential for a half decent correction that'll last several months, and then from there, hopefully continue to go higher. But we'll take it by bar when we get there. Looking at futures this morning of the SP 500, so you can see where we stand. Seeing a little bit of selling this morning. We're down about 0.3%. Just looking at the past 2 days, the previous session here, not yesterday, but Wednesday's session, we ended up closing right here. And then yesterday we saw a nice move up, and it flagged, had a nice bullish pattern, becoming a little choppy, showing the bulls and bears are struggling a bit. In overnight trading, we faded back down. Of course, we faded down on nice light volume. We're kind of dipping below a couple of these pivot lows. Yesterday's pivot low will be coming right down into this pivot low, which is normal. You'll see the market kind of fade down and break those lows. Hopefully we don't get a big sell-off and see prices really dump down here. Hopefully we just see a little run of these stops. And in a bull market, it's a tendency that you'll see the markets gap down in the morning and then get bought back up. And all it's doing is flushing out the short-term stops, get those short-term traders out. Then big guys catch all their stops, and then of course they let the market, they feed it, juice it a bit, get the momentum going, and it starts to continue to go higher. And they're sitting here with most all the short-term traders stops that got stopped out. They're sitting there with all their positions now in the money, and it's the inverse for a downtrend. When the market is down, you usually see the market gap up and then fade back down, fill that gap, and continue to sell. And that's simply because they're running the shorts, grabbing all the shorts at the top here, and enjoying the position on the way down. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.